take a look at Paycom. So Paycom reported earnings yesterday after the bell. They actually did okay on earnings. It was their guidance that was bad. Now this one starts getting interesting below $150. So below 150, it was just before I started this stream back to about 149 to 148. That's a drop of around 40%. Now, interestingly enough, they warned, but they only lowered guidance by about 10 to 15%. So you're seeing a 40% drop in stock price on a 10 to 15% reduction in analyst estimates, or essentially what the company is estimating. So that gets my attention. But ultimately, it's all about the levels. And I want to show you this. Here you have a pivot point right around 150, and then right below 150, around 145, there's a gap fill on the chart. So again, I would say this is very high risk. It is not a super liquid stock. I think on a daily basis, it trades around 1 million shares a day. That might sound like a lot, but that's not a lot of volume. But again, below 150, this actually starts to look interesting for a technical bounce. Let's do a quick check here on the intraday, and we can see right now, if we flip over to the intraday, it is trading just below there at 148. Now remember, folks, high risk. So if I'm going to get into this, I'm going to be buying very small and be ready to dollar cost average, probably all the way down to 140, 135, maybe every $3 to the downside. The bounce target would only be, basically what I would say is a pre-market. So this is the after hours move. See this little area right here? That would probably be my target. The max upside I would look for this, maybe back to about 170, 167, somewhere in that vicinity. But again, starting to accumulate down here every few dollars, to me, starts to look pretty interesting. And just a reminder, this is not financial advice. I'm speaking strictly from what I would be looking to do in this chart when the market opens to see exactly what the trades could be.